How's it going? Happy Thursday, not Wednesday.
Thursday.
How's everybody doing today? Still solving, still alive?
Barely.
Yeah, here you're there. All right. All right. So yeah, we probably just get rolling here. Yeah.
Hey, Gaines.
Hey, Jake, what's going on, sir? Yeah, things have been a little rough. Been a little tough to predict. It's been a very headline driven kind of circus going on. So hopefully we can figure out what's going on here. I don't want to spend too much time on like we all kind of know what's going on with the Iran stuff, but I still want to talk through here just like just a couple scenarios. I mean, I think in my opinion, there's a very clear setup for both bull and bear, and it really just depends on where we top next. So let me go ahead and share. So before, sorry, 1 second here. Let me get all ready to go. So I kind of kept the drawing here from last week. I like to kind of see what happens. So instead of having that that 5-wave that 5-wave down, what we ended up seeing was of course this monster headline driven rally. And it's kind of funny how this little squiggle I drew here actually kind of is pretty damn close to what actually happened, but that doesn't really help us now, does it? So it's classic. I guess final termination wave fake out. These things happen very often. So what I think sorry, I got a throat thing going on here again. I said I stopped talking so much. Okay, so basically, and this is just for your trading tool belt in the future. So, when you're typically short, and you like I always kind of tell people like, all right, so like let's do the measurements here for just a regular ABC, and when it gets to about the 1.382, in my opinion, that is a pretty clear sign to take some short profits. So that would have been right around here. So like we'll just use the S&P. That would have been right around this like the 6,600 mark. And as you can see here, even though we did sell off more than that, one of the telltale signs here to re-short after a pump is usually if they breach this, they breach this fib level here, that could typically be a C leg. And let's just say we don't have a lot of this information for this price action. Just want to kind of give you guys a kind of what I think about here when we're looking at the charts. So this did happen. I remember charting this out, and I think I might have added some longs here or something like that, or I can't remember. Anyways, so it hit this key level, and then you could start to see a lot of the options gamma that started to like a lot of positive options gamma. And also I think around this time here we started to get that more like headline driven kind of crap. So it started to get a little bit more nuts around here. So I guess at this level though, you can kind of see there's still a lot of heavy sell delta up here for the S&P at least. And if you pull up the Nasdaq, you can see that there's a lot of more buying here. But also got to take into account that that the Nasdaq typically supports the market in general. So what this tells me is that this is a very like top heavy kind of rally, and there's not a lot of broad participation. So even though we do see this very crazy kind of run up here for market breadth, but I do think that this is some sort of like bear market kind of, not bear market, like a suckers rally, I guess you could say. But I guess the bears were the suckers back last April, and it wasn't a bear market rally, despite all the doom and gloom. However, what's different this time, and Jake, I think we were talking about this earlier. What's different this time is that oil we can, here, let me just pull this up. What's different this time is oil. So back last, let's see here. Well, I got a bunch of junk on this chart, but I mean, as you guys can see here, way back in April here, oil was actually, really, really low. And even when it bounced, it didn't bounce that much. So in my opinion here, you've gone a significant amount higher. If we were to measure this from the last news headline based kind of rally here with tariffs, oil's gone up 142% or 143% versus this time last year where we had the first news headline shocks. On top of that, we want to look at the yield. The yield didn't really do much, but if you're looking at it, yeah, here we go, right around the same time. So the yield itself is kind of right where it was back then. So we get this big buy signal here. This is a weekly buy, by the way, and we get this right around the same time. We get that bottom in oil. We also get this bottom with the yields. So it's almost like people at the time were buying bonds for protection, but the volatility is really high. So I just wanted to show you guys that for context here. Now, if we're looking at what's going on today, I actually think it's a better view to show with oil layered on top. So bear with me here as bear with me. The joke gets old fast. Sorry, guys. Hey, you got to line it up somehow, right? All right. So if we layer on oil, all right. So this is a inversely related kind of chart, and I just wanted to show that typically oil and equities do track together, and like the correlation before it's kind of loose. Like you could still see that there was some lagged effect here, but you could see that the moves in oil were very shallow. Oops. Like you see the moves in oil were very shallow, and you didn't really get a lot of gyration here with with the markets, but you can still see that there's some reasonable inverse correlation there. I do think that oil and yields track very closely together, and you also see that sometimes Bitcoin joins and you can get that relationship pretty tight. So when everything's kind of correlated together, you get these things. Now you can see that everything was kind of going well, tracking oil up until you get to this point where we had very high oil prices, and that's where people were placing a lot of leverage bets on equities, equities coming down. So if you think about it, well, hindsight's 2020, of course, but that's everybody's thinking that we do. Everybody's thinking that we do something like this, where we do this 5-wave down kind of thing because oil's high. Well, I guess you could see, like, yeah, there's a lot of there's a lot of put gamma on the books. Trump kind of hinted that there was going to be some sort of like special surprise or whatever, anything amazing can happen. I got to get better at reading those, but still, we had this kind of rejection here, and we had a lot of bearish intent, a lot of top wicks, a lot of people selling underneath the 200 DMA, and I would say more often than not, when you get a really, really bearish kind of reading where everybody's kind of doomy and gloomy, and especially when you get these signals like really high oil prices or high yields, that kind of thing, it's a perfect recipe for a short squeeze, and epic short squeeze at that. The one in April or last April was far superior to this one, but I think people were also getting a little fatigued here by all these big buy spikes from all these news headlines. I would say over the last, 15 years, guys, this has been probably the most frustrating leg down to forecast that I can remember. And part of it is just because a lot of the forecasts really, in the past at least, were more reliable because you didn't have so much news headline based volatility. Normally, that news headline based volatility comes with things like low VIX and then exploding up with something, or it's just time, like things have been consolidating for too long, they got to reverse down, so on and so forth. And it's all about that accumulation and distribution. if you can kind of read the tea leaves there, I think it's a little bit more, I think it's a little easier to understand. On top of that, let's take a look at some of the volume here. So the volume itself, let me do the daily. So another use case here is you get a lot of lopsided buying, and you're still kind of tangled up here. You're tangled up here in some of these some of these moving averages, and this is, to be honest, like this is probably the first test that the first test from the upside to reclaim it that the bulls have had for quite some time, because we've been trading above it for so long. So now, typically, what you see with that first kind of retest is you kind of see this bit more of a crest, at least from like a volume perspective, and you might see like the relative strength indicator dipping here. But even at the daily level, it's still not as strong. I mean, it certainly seems strong, but we've only had this for a couple days, or we've only had this conditions for a couple days. I mean, raise your hand if you think that this wasn't engineered for somebody's buddies to get out of trapped long positions. I mean, we all knew it was coming. All right, so now let's take a look here and just kind of recap. So, I guess long story short here is you want to kind of look for like a decline of volume. We haven't really seen like a super heavy decline yet, but I think that the story is a little bit more clear when you look at something like like QQQ. Now we do have this little blip in here where we had Easter, so we had like half day and stuff like that. So kind of that kind of throws off the averages a bit, but you can still see here that we've got this pretty sharp decline, and especially today. If you're looking at the 9th, I mean, the volume today was actually crappy, well below average. If I look at something like SPY, and I promise this isn't just all bear. So if you're looking at something like SPY, it's got the same sort of like kind of average decline. Now I'm looking at this, so sort of like average here. That's we could see a dip sure from from Easter, but you can also see that the RSI was super elevated with that first pump day. Now, with that being said, typically, when you see these, sorry, my trend lines are off here, but typically when you see these kind of major trend lines breached, that's when you start to see some danger. So yes, we do have a inverse head and shoulders here, but I'm going to explain here why I think that this is probably just a just a counter trend rally here, and I think that the longer term is going to be down. So there's really several factors. One is really just just a general decline of volume, but also we breached some pretty long term support levels, and you guys remember, like we had to, here I'll show you, we had to keep adjusting this this trend line down here the last couple of weeks. Like, well, if it breaches that, that's just weakness, guys. It's we don't need to go into detail about it. It's just general weakness. And when you look at it from a long-term perspective, I mean, to be fair, look at this gigantic run-up that we've had. It looks like a pretty clear exhaustion kind of exhaustion kind of thing. And also, without getting into super crazy details, there were like a lot of like market maker hedging flows that kind of stopped the decline, I guess, from accelerating. So a lot of people can play games with like zero DTE gamma, like we've been seeing that the last couple of days. Like people will buy a whole bunch of put options or whatever, and force market makers to buy calls to hedge against that. And we saw today $15 billion worth of notional value. That's gigantic, absolutely gigantic, and that's actually systemic risk to the market. So that kind of tells me that people are trying to prop up the market as fast, or not as fast, but like they're trying to prop up the market here because they're either distributing or they're trying to get out of trap positions. Maybe some call options they took out right around the first test of the 200, and then it sank lower than that. And also, when you get this sort of like fast rebound, typically they retrace, not immediately. Usually it takes a couple days, but typically when you see these types of moves, you get a lot of long-term positions that are compromised, I guess you could say. So we have the JPM collar, which is right at like this 6830 level. I think it's 6830. But you can kind of see today that we didn't have a rejection per se, but we did have some sort of at least like a stop. And also the RSI has been declining a little bit in addition to the volume. So let's also kind of take a look here. Sorry, I know I'm going fast, so please stop me if I'm going too fast. So you can also kind of see here that with the S&P that you have a pretty massive, pretty massive concentration of sell delta up here. So you can kind of see that we've seen some distribution in some of the other tech companies, like some of the SaaS companies that have been super beaten up with AI concerns and stuff like that. I mean, Intuit today was down 9%, but the rest of the market was up. So there's going to be a tale of two markets here. So I guess long story short here, I know I said that a bunch, but I kind of think that you might see a top out. I do think that you're going to get some strong defense from the JP Morgan collar because there are, it's $1.3 billion, something like that, of like options that were bought, and then the notional value behind that is even larger. So that's big risks to the, or at least big like upside risk to a relatively downside position that protects a lot of the JPM portfolios. So I think maybe the max we might get out of here with this current pump is maybe like 6830 or like 6860, maybe something slightly higher than that. If you look at something like the Nasdaq, it might be something around like 25, 480. And these levels aren't 100% precise, but they're still, I guess relatively close. So this is a major, like a major fib level here. And I think that overall, I think what you're seeing here is, it actually shows it better, that this is more of like a ABC kind of view. So I want to just chunk out of here. There you go, let's just mark it. I'll take that out of here. So when you see these, to me, it kind of looks like you've got, it's some sort of like ending diagonal maybe, or maybe it's some sort of like the first wave up, like an A, excuse me, like an A wave with something maybe kind of like this, where you can see like a head and shoulders pattern develop over long term. And I think that this is going to be probably what we see. Now, it could do something like this, where you get a little bit higher of a retrace. But I do think you will see a test of this first like big stab down. I think that this is where a lot of sellers had accumulated positions, and I've also seen some reports of some pretty crazy losses with some of these hedge funds, and they're going to have to try to make it up. So with these sort of rebounds, really what you want to look for. Here, let me zoom in for you. What you want to look for, well, I'll kind of pull this off to the side. You want to look for how far this thing could potentially retrace. So in my opinion, this is a very clear ABC. So I'll mark that. And typically you will see 5 waves in the last C leg here. So you can already see that today it hit that 68.32 level. And I don't think that that's an accident, that the JPM collar is right at that level, in addition to, these big extension levels. I think if you just draw it quick, you can kind of see here that you might have something like this. And I think we may have finished like the wave 3 today, and maybe we get some saber rattling news or whatever tomorrow, where you get some bears that try to try to take profits, or maybe it's the same actor, nobody knows. But I can also count 5 waves here in this kind of extended leg. But I guess overall, what I'm trying to say here is that this is kind of your zone. I think your upside risk zone. And yeah, you could have an extension up here. I really don't think we're going to get like another kind of extension up higher here. I think that there's not enough volume. There's not enough. Well, I wouldn't say there's not enough energy. These guys have infinite supply of money, but I think a lot of these headline-driven sort of things, they wear off over time, and eventually they're going to play the opposite side. And the people that bought up the market they're selling into it. They're taking profits, and what they're doing is they're also accumulating short positions. So then when they get the notification that whatever 15 minutes before that Iran starts launching missiles again, against its neighbors, that kind of thing, then they're already positioned short. So they get the best of both worlds. So what I'm trying to do here is I'm trying to look at these charts through the lens of what would I do if I was manipulating this market? I mean, to be fair, like that's what's been going on the last couple of weeks. So if you can't beat them, join them. What I'm trying to think about is, if I was going to try to make the most money possible out of current geopolitical environments, how would I do it? Well, I would jam it up as far as I could, and get out of my old trap positions, and then I would reposition short for a much longer sort of protracted decline. Because when you're looking at these charts, when you're looking at these sort of setups, this to me looks very, I guess I shouldn't say it looks very, very bearish, okay, because it's not bearish with the current leg up, but longer term it does look bearish. And the reason is, you see these types of corrections. You always see these types of corrections where you could get like a B wave, and it's just showing that here. Let me just make this simple. Like you could get this sort of B wave thing here where it just stretches up just a little bit more, and then you get some sort of like major test of a low. And Jake, I also think we were talking about this earlier today as well, but with oil up more than 100% in a year, that typically causes a 20% correction. I posted the article in the discussion channel, but Kramer was highlighting that the other day, and I thought it was actually a really good point. So when you look back historically, I mean, oil's and everything, and it drives inflation. So Iran's only major advantage right now is control of the strait. So if they maintain control of the strait, then that means that they maintain the control of oil and also the supply. So without any sort of like other major supply coming online, they have control of oil prices for the foreseeable future, which, in my opinion, is going to cause some pretty crazy fluctuations with either gas prices, but they're still going to stay elevated, at least I assume. I just don't see a world right now where this ends quickly. I mean, I think I was joking around about it the other day, where it's like, everybody always has this goal, like, the Russian special military operation. We're 2 weeks. It's like moving the money pit. How long is it going to take? 2 weeks. And it never takes 2 weeks. 4 years later, still here. But I think that both sides needed some sort of win per se, and Trump needed some sort of relief, with the VIX, and there was a lot of kind of like that doom news spiral that was going on. So I guess the easiest way to say this here is typically, if oil is going to maintain its elevation, eventually gravity is going to catch up to indexes, and also too if the yield keeps moving up. Eventually the yield's going to have to move up by default because oil's into everything. It's plastics, it's this, that, and the other thing, and it's very important to our to the global economy. Higher oil prices, they're just passed through to the consumers. The real takeaway is we might be short-term bullish, but longer term, even only just a couple months, you will start to feel the bite of higher prices again. Not just groceries this time. Now it's everything else. So people that are income sensitive, people that have just been recently unemployed, cough, cough, Oracle, like 30,000 people to shore up a balance sheet because of AI investment. That is a standard earnings per share sort of move, and think that that's one of those things that you start to see a lot of in these late stages where there's a lot of expense, not a lot of return. So you got to shave some expense. And the easiest way to do that is, restructuring, restructuring. Yes, Jake, question.
Hey, can you hear me okay?
I can.
Okay. So my question that just came was like, I mean, I think I see where the sell delta is, lots of resistance to overcome there. I get it, but cryptocurrency is going up,
Yes.
and that just doesn't seem bearish at all to me but okay, maybe people are seeing it as a utility in the Middle East because they want to charge tankers in crypto. Is that why it's going? I just don't that's a little bit of a warning sign because usually cryptocurrency runs when there's excess money in the market.
Yeah, I agree. I think there's definitely I wouldn't. I mean, there's been some accumulation for a while, and I think that the accumulation. Oh, hey Don, did you put yourself on mute? I think the accumulation that we've been seeing there. I think it's more about like recovery in general. Like Bitcoin had been selling off for quite some time here. Hold on a second. And you're really kind of looking at like a longer term sort of wave forward here. I mean, to me, this is a very this is a bear flag, and I mean it's an imperfect bear flag, but you can still see that you might have a little bit more room to run here, maybe like one of these things, but um, eventually you'll probably have another leg down here. Let me do it on the daily. This to me just looks like like a continued sort of or like a period of consolidation, and then or like a wave four in general. I mean, you can kind of see here that we've got this ABC here, and it aligns pretty well with like a B wave sort of correction. So I think you could get to the point where crypto goes up, and this is just freehand here. Oh, hey, look at that. Freehand drawing. But I think, you'll probably hit like 79,000 or maybe slightly above. And you could see probably not just a retest of the lows, but most likely settle about like 52,000. So I think that crypto is, crypto's been accumulating for a while to try to do this like counter trend bounce. But, I mean, if you look at just, the crazy selling that happened, just a bit ago, or, a couple of weeks ago, it still hasn't really recovered very strong. I think that, it probably doesn't have much more, much lower to go other than like this 52,000. But I think if it's, correlated with, equities, there is certainly a case here where you could see crypto accumulate, and then you could see equities kind of bounce around this area here, like to kind of make that head and shoulders. Again, like we say all the time, timing is everything. So with equities kind of bouncing around here, and you got demand for cryptocurrency, with takers going through the strait, that kind of thing. Yeah, that could drive up demand, sure. I mean, it's got a fixed supply, unlike dollars where we keep printing. So hopefully that answers that question. I think it's more of like a slower recovery for crypto. But like from a broader sense, it's like it almost had to recover anyways with how oversold it's been. Let me check the RSI here. Yeah, I mean, on the daily level, you had a pretty huge dip here. Like that hasn't really happened for quite some time. Like you got another one here, but it still took, 55 days for that to resolve, and went way lower. You would kind of pull that out here, about the same, or slightly more, but again, it kind of looks like a B wave, or could be a potential wave four. Does that answer your question, Jake? It was a good one.
Oh yeah, thanks. Yeah, that helped. I don't know if yeah, I can ask another one. I'm just maybe before we end the call, what I want to see like game plan of the different scenarios that you had mapped out That was really helpful to think of if we were in a 5 wave and we're looking at a small wave 4 down tomorrow or, into next
Sure.
week and then a wave 5 up. And then if we don't get that, we'll see if we are topping here and we're actually gonna turn and head down. I mean, you really don't know in this market what is gonna happen
What are you
on
talking
any
about?
given day. Yeah.
Uh,
So
every
I,
day,
I also
every day.
I also am like an algo subscriber, and that one flipped to risk on.
Interesting.
So
Okay.
that made me think that, okay, maybe we are going to keep going up, and or we get that small wave 4 down and then continue on higher.
Yeah.
Um,
The only thing I'd say about that, again, like I don't know how the algo services, work or whatever, but I'm kind of guessing it's, a lot of it has to do with moving averages. I mean, and to be fair, we just cleared 3 major moving averages in about 2 days. So I mean, like for example, if I was coding a model, I would, I would definitely put in some moving averages. So if you close above a moving average, um, then that to me gives like a good confidence signal that we're probably going to continue. However, what I don't want to get in trouble for this. Don't tell on me, guys. But I think what you might see is because things have become so distorted with how fast things have been moving. This is not really like a fundamentally driven kind of rally, if that makes sense. It's more of like it kind of falls back on like buy the rumor, sell the news kind of thing, or sell news, buy the rumor. You know what I mean? And I think with some of the algos, they struggle a little bit with corrections. I still think that corrections are, I'd say I trade corrections a lot, or I'd say heavier on the bear side a lot. But I think also too it's because it's a little easier. It's a little easier for me to read because sometimes with on the way up you can have all these extensions with wave 3s and 5s and 1s, and and I guess the normal retail trader always takes profits too early and never really leaves like runners win, or lets them keep running. But with corrections and stuff, you're almost forced to do that, both long and short, because things like this can happen where we like I was expecting some sort of ABC move up, but having it all happen like right away, I think was excuse me, I think is one of those things where it always surprises everybody, and it's usually when the RSI gets real low and you get a lot of that base that's been building. But if the algo services are flipping, excuse me again, if they're flipping bullish, I just don't think there's enough price action here to read that and make an actual effective call that it's going to be bullish. Yes, there is some buying pressure and stuff, but if you look at some of the other signals, like I was just saying before, oil still hasn't gone down in a meaningful way. Yeah, it got sold off big time, but equities also shot up. It still hasn't gotten, it still was at $100 a barrel today, and that is not a risk on signal to me. That's actually a run for the damn hills. But as you can see, it's really just a matter of timing, as always. So I guess I can talk about that in a little bit, but let me finish up the bearish thing here, and then I'll show you the bullish kind of scenario. So I think if you look at, let's say we get a little bit more traction up here, and then we finally start to see that kind of consolidation zone up here, where you get that like kind of right shoulder, or here I'll drag it up. Maybe get something like this. I really think you would really have to have like world hunger solved, cancer solved, all in the same day in order for us to clear probably this left shoulder. There's a lot of trap gamma up here still, but it's you can still see that the majority of it is at the 68.5 level, and if you look at the Nasdaq, the majority of it is up here at this 25,600. So we're almost there. So right now I think this is like a double top, and if you look at the S&P, I think that this is going to be a head and shoulders. And if you kind of back it up over the long-term period here, and this is my reasoning is specifically driven by the price of oil. I just don't see how this is going to end well for anybody. And when you see, when you really back out here and you see the overwhelming kind of volume that's been traded up here, you don't actually typically see a lot of well, sorry, if you do see another leg down here, you'll see this volume profile kind of shift. But it actually kind of makes sense why somebody might be trapped up here. Look at all this buy delta. But if you see the volume here, there's definitely been selling into strength, definitely. And to be fair, we haven't had a good solid top in a while. So even just a little bit of a pullback is not necessarily a bad thing. I think it's actually a healthy kind of correction. But yeah, so right now I think what we'll do is just kind of leave it at that, and just say that overall I think we'll have this this kind of view here where you get this maybe a little bit higher, and then yeah, 1 second, Jake. Like you'll get a little bit higher, and then you'll probably see some sort of rollover here, and due to Iran not complying with ceasefire or something like that, and oil shooting up even higher. I think it's going to hit at like 120 before you get some real selling and some real kind of panic. All right, so that's like the bearish case. All right, Jake, what's up?
Okay, I'm just, before I let you off the hook on that, I want to look at the Liberation Day situation where we all thought, oh, we're going to go back down again. So
Yes.
if you're saying volume this, volume that, sell delta this and that, let's go and look at that one and see if it
Let's do
looks
it.
the same.
Here you go. So if you remember, we made that big old fat bull flag for like a week and a half. 1 second. Uh-oh, lost my place. Here we go. Sorry, guys, I know I'm jumping around a lot. Okay, so this was the Liberation Day stuff. So let's see here. Oh wait, sorry, no, that was the first taco trade. So you could see, you got some people that were trapped up here. I think that was when we were down like 5%, something like that. And we did have a ton of volume here, but then you also had this this first kind of blast up, which did have a lot of volume, but then you also had sort of the answer back. But that, to be fair, like I guess that it was a surprise, of course, but you also still saw this larger ABC, and it did retrace. I think it was maybe 0.6618. Not sure. 1 second. Okay, so it didn't. I think it ended up bouncing under some moving average, or whatever. But really, I think this entire section here was more of a covering kind of move. And if you look at what just happened here, like yeah, we just had this big run up, but we also didn't really have much of a pullback to kind of reclaim some of these stuck positions. So while I think that like I guess when we're looking at this this more recent kind of pump here, you could still say that yeah, I mean there wasn't like a huge buy spike. There was right here, but then we saw like another kind of capitulation leg down, but it still had lower volume. The other one was more, I guess, global panic, where everything was selling off. But when it comes to this, like we just aren't seeing this massive, like you really want to see this continuation of all this kind of bullish volume here, and that's where I think you'll get more. Like if you do see some sort of pullback, it's possible you will see something like this. But let's say, and now we're getting kind of into the bullish scenario here now that we've kind of taken care of the bear spot. So you might get some sort of like, I mean, megaphones are kind of rare, but you might get something like this. Maybe Monday, Tuesday, next week, something like that, as it just kind of creeps up higher. But it really depends on like what happens with this kind of collar level at the 6830. I mean, $15 billion in zero DTE gamma is pretty telling. That's somebody's defending something, or somebody wants to keep something pinned because of that systemic risk to the market. So I guess in general, I kind of see we could see some sort of ending pattern here. It's possible that we're actually not going to move much higher, because we could see like another little wave 4 thing kind of develop, where let's say we finish up this wave 3 here. Let's say tomorrow we get a final move like this. Let's say we get some sort of I don't know, ending whatever, insert whatever here. Let's say you get some sort of like tight flag or something that develops where it just keeps grinding up like this. And let's say the wave 3 isn't quite done yet, but it wraps up like tomorrow or like tomorrow. Then maybe next week you could get some sort of revisit of this kind of support, and then maybe a launch higher. But I'm still not really seeing the volume that you would want to see in order to kind of sustain this sort of move. But let's say that it already ends and we get some sort of pullback tonight or tomorrow or whatever. We get some sort of news, whatever. I do think it's plausible here that you will see some sort of like you could see a pretty deep sort of, let's say you see some sort of like deep pullback. I don't think this is going to happen, but you could get this move all the way down here and then only get a marginal new high after this. I mean, this would look kind of goofy. This doesn't really look proportional when you're looking at the higher time frames. This sort of move doesn't really happen very often. Actually, not really at all, especially when you're not getting a ton of volume. But kind of like we were talking about the sell delta up here. Even if we did reach a little bit higher, this is still a very complete ABC. So what I would expect to see, even in a healthy market, would be sellers, wanting their money back and trying to, maybe do like a little ABC down to, correct the corrected move. And that's kind of weird to say. And I think the Uber bulls always say, everything is just a setup for the next rally, right? And we're going to go to space. All right, cool. But what's the catalyst, guys? Somebody tell me, what is optimistic right now about $100, $100 barrel of oil? I mean, I guess you could say, there is this part of me that's like, yeah, I mean, markets can just continue to go up and you try to short it and you get screwed. But I do think that there at least has to be some sort of, gyration over the next couple of weeks, because, we just had some really big moves off the bottom and it wasn't fundamentally driven. When we did have the Liberation Day stuff, that was driven, but that was also more, economically focused. This is still economically focused, but at the time, oil wasn't very high, and neither were the rates. And the rates were kind of, about the same. But that was also before we knew, or before we got the the CPI data and stuff. That kind of threw a wet blanket on the rising yields. Whether the data was manipulated or not doesn't really make a difference. It's so yeah, I mean, this is, I'd say, the most uber bull permeable kind of thing you could possibly muster. But again, I really think you got to have Jesus comes back to Earth or something. Something happens where it's just aliens come down and give us technology and advanced civilization 1,000 years, and the market's just scream to the moon. But yeah, that's kind of my initial assessment here, is that volume is really the telling piece here. And when you're kind of looking at a lot of these different pieces, gaps filled too. We got this monster gap here in SPX, and even just here, so let's see what that retraces, and then I got to move on. But yeah, I mean, even if you had this like a 50% retrace, we'll definitely close that gap, and also test support here with those moving averages. Even if you had a big old even if you had a big wave 4 kind of thing, oops. Even if you had a one of these kind of weird, goofy looking impulse waves, you still probably won't get a pullback like that, but you get something. I'm a big fan of gaps get filled. So with that being said, any last questions before I move on here? I want to make sure I can get to oil and stuff. Okay. I must have explained it perfectly again. And I love when I do that. Not conceited or anything, guys. Don't worry about it. All right. Let's have a look-see at yields here. All right, so yields, I think, are just doing a normal pullback. Yeah, I think we're seeing, just to kind of put it in context here, this is just sort of a normal, we just broke out, but there's gonna be some sort of test of support here. And that I think would happen probably, the next few days, because that's also going to, I would say, like, I think that's gonna somehow factor in with oil. I just think it's kind of like in the middle of a little bit more of a leg down here. But I do think it would be a good buy setup, for some TMB right around here. And I think that would still be a better cost basis than where we exited before, a little too early. Okay, so that's yields. Gold. Gold is, I think what gold's going to do here, same thing with silver, is I think they're going to kind of just creep up a little bit. Looks like it's making a ending sort of diagonal right before it gets to this 0.618 move. But I can still kind of see like some impulse waves here, or maybe it's going to complete a series of ABCs. Not quite sure on that yet, but the same general principle. I have the targets in the daily post, but I think it's just going to reach up a little bit and touch these, and then we're going to see probably some selling. And you can also see here that we've got some volume that's headed down as well. Silver is actually kind of lagging behind here. It was looking nice for a couple days, but anyways, yeah, I still think that this is another telling sign. So it's almost like you get this big buy up in equities that have been kind of delayed. Like we were talking about Bitcoin earlier. You got this little bit more, like a little bit higher to go before you get some sort of like drying up of volume, and then you get some sort of retrace. All right, the oil. This guy, I think probably what you're seeing here is, it kind of looks like, it's a little difficult to forecast at the moment, but it kind of looks like it's a wave 4, or like just a continuation of something. I think you'll probably see maybe like it's like an ABC there. We got some support. Even though we get some selling today, it wasn't enough to derail it. You actually got a ton of buys right here, right along this 98 to 93. I think that, I don't know, I just think oil's a good buy right now. I think the news cycle's full of shit. I think that it's going to be, I think you're going to see just problems. Pardon my French. So I think the next step here is probably just another slow walk up of oil, unless there is a bigger shock, like some ships get mined or something, and then I think you could probably see more like a 5-wave kind of thing, and everybody kind of panic buys oil. But we got to take it a day at a time with this. Gas, I don't know what gas is doing. Gas is just being weird right now. It's just kind of trickling down lower, and it's just accumulating. Like, you're still seeing volume, but it's nothing that's like truly significant. I think overall, though, you are seeing some sort of lower volumes. I think, again, if you have another shock to the system here, you could see gas rocket up pretty quickly. And for stocks, man, what a joke this is. So, who knew that? Who knew that you get some gaps and stuff, but gaps fill, guys. So just looking at this, I can tell this is already a 50% retrace to close that gap. So I would look for some sort of stall out, maybe like 380. It could potentially go a little higher, maybe like 390 is probably a stretch. But like, again, I don't think equities are going to grind up too much more without a pullback. So I would expect there to be a return to this like 342 level, where you got a lot of this sell delta short term. Nvidia. Does anybody care about Nvidia anymore? It's up, staying up. It's not going to come down until the whole market crashes. Anything to add? No, it's just not doing anything, guys. It's once you're beyond that 4 billion mark in market cap, I mean, look at the distribution up here. I mean, this is a very clear kind of B volume profile, which is if you get this very lopsided buy and sell, it's definitely going down. It's just a matter of when, at least in my opinion. I think they've pretty much booked all the sales they can, and they're going to really have to fight to maintain that revenue stream. I think a lot of companies are getting spooked by investor backlash on all the capex expenses, and they're not. And yeah, they're laying off a bunch of people in order to pay for all the AI stuff, but I really don't think they're going to spend more money on AI stuff without justifying with revenue. And I think that's the back half of the business cycle where you've got all that spend, and then finally comes out in the balance sheets and they get punished for it, and then they got to pull back. So I think that's kind of where we're at right now. So that's why I don't think something like Nvidia is a good play at all, at least anymore. All right, Tesla. I think Tesla's been getting a bad rap here. There's nothing fundamentally wrong. Oh yeah, good point, Jack. Yeah, and the accounting methods. All these guys buying and selling to each other. It's like this feedback loop where all this depreciation should be more like 3 years, but it's like more like 5 years, but it's 3. Anyways, it's I'm not an accountant. All I know is that it doesn't really smell right. I agree, Jake. But yeah, I think Tesla here is. I just want to take a second. Like I think Tesla's a strong buy, just because like you're going to get that SpaceX Elon Musk kind of bump, where like it's a huge company, and anything Elon Musk touches turns to gold. And it's just the style of investing. It's like people will flood into whatever Elon Musk owns and he runs, because it's going to be successful, and it's going to eventually generate cash. I feel like it's the same thing with Tesla, where it's going to get that kind of Elon bump here, where it's been people have been buying all the way down. I mean, they were doing the same thing in the indexes, and now you're starting to see some selling pick up. Right around these lows, like on the daily views. And I think it's getting real close to a good bounce point. Like it can't get too much further, further lower here without any sort of catalyst. This has just been grinding down. So I think this is just a normal kind of, buyers accumulating and, waiting for some sort of announcement. But one last caveat though with Tesla, I don't think they're out of the woods yet. Like all ships rise and fall with the tide. But sometimes these other companies, like they're not going to keep pumping up Nvidia, because Nvidia is topping out. They can see all the sell delta out there, and it'll be resisted. But something like Tesla, they can pour a bunch of money into that and keep the stock market propped, because that has large market cap. So they kind of ebb and flow. At least that's kind of what I've noticed over the years. But anyways, long story short, I just think that Tesla's just a stronger buy here, especially when it gets down to this 0.618. So I'll probably going a little bit more on that one. All right, MSTR. This cursed stock. Even though we've made a lot of money over it in the past, I just want to be out of this thing. It's just a pain in the ass. My French is really terrible today. Sorry, guys. But it's it's just not doing anything. Yeah, it's accumulating, but yeah, it's just garbage stock. Yeah, I don't like Michael Saylor. I just don't really want to trade it anymore. But you can kind of see here it's got declining volume, so I think that you'll see some more accumulation and a run up higher. Okay, well that kind of does it. That may be time for like one more question here, but I do have to end on time. I gotta take the boy to baseball. Crystal clear, everybody? I'm sure. Okay. All right. I will assume that.
Can you hear me?
Yes, pirate flag. Yes, I can.
The VIX is not moving that much. Is it manipulation, or buyers just think that it's going to continue to go to new highs in the indexes?
So it's a very good question. It's kind of difficult to answer, because there's a lot of short-term things at play, like volatility compression. There's a lot of like when it comes to actually, I think Jake's a good person to ask about VIX and how it kind of oscillates. He's pretty well studied on the VIX, but when it comes to volatility, I think what's going on with this is that anytime it's really a function of like volatility, but when the volatility is upward, then all that, like the prices just come down in general for options, because usually you're climbing the wall of worry a little bit slower versus taking the elevator down. So when you have more downward pressure, you get a lot more fast volatility in something like the VIX. But also too, like it just happens sometimes when VIX gets crushed. But I think what these guys do is over the course of a couple of days, while they're crushing the VIX, they also pick up really cheap put options. So, like for example, tomorrow, if we see some sort of topping, and I'm sure maybe some sort of pre-scheduled news release about saber rattling or something like that, and the market drops 2% or whatever, I'll bet you $100 that these guys have all bought a bunch of puts that might be the same actor. So what I would like to do. And again, this is sort of kind of why I was saying this before, where this might be a really good opportunity to longer term short, is because there's probably not much more juice to squeeze out of this rally. They've already gone so far so fast that they've taken everybody by surprise, and you're going to see a little bit more aggressive price action, I think, once you actually get some bad news, because once the bears are just gluttons for punishment. They could take a lot more than the bulls can, that's for sure. But when it comes to the VIX, I think that when you see these sort of levels that are typical like resistance points, and you get them, that's why I think you see a lot of like consolidation. If it's like a B wave or like a wave 2 kind of thing, where you get a lot of these people that they reposition for selling for the next leg down, because usually the C leg is the most powerful. And if it goes a lot deeper, because let's say oil goes nuts, they stand to profit enormously. And just getting it cheaper, getting the same contract for the same duration they were going to do before, just a little bit cheaper, probably costs them a lot less to keep driving up the market and keep driving volatility down for the VIX. So it's sort of like a math function almost. At least that's how I kind of think about it. Is let's say it cost you $1 billion to juice the market up, but you're going to spend $3 billion on put contracts or short positions to make $10 billion. So you spent $1 billion to make $10 billion, kind of thing. That's just kind of how I think about it. Hopefully that answered your question.
Mm-hmm.
Okay.
Yeah.
All right, guys. Well, I do have to get going here, but I do thank you guys for joining as always. And oh, you know what? I would actually ask. Alex has been asking for some feedback that we can post on the new website. If you guys like what's the communication and everything like that, it'd be great to drop a note and DM or something to him, and I'd be greatly appreciative. All right, guys. Well, I'll post the webinar and everything. Hopefully this gives you guys at least a little bit more information about what we could possibly expect here. I know it's tough, so stick with it, guys. We'll get these guys. All right, guys. Have a great day.
All right. Thank you.